The worst thing that can happen while trading options with the wheel strategy happened to me this week. Right now it's Friday, but I made a quick video on it on Tuesday, so let me share that video real quick. So today is Tuesday. We are down quite almost 2%, $1,000, and a big part of that is Tesla is down 2% and AMD is down almost 5%. So I sold the put on $85 for AMD, and we can see if we look right here, I sold the put at $85 and it did execute because it was like at 84.90 something when it executed. We can actually look at it, 84.85. And so I did buy 200 shares at $85. Now if we go back to AMD, it's at 78 right now. That's horrible. I've lost quite a bit of money, as you can see. Total return negative 1,300. So this is a bad thing about trading options. The worst thing that can happen with the real strategy is you sell a put and then the stock market goes down way under the strike price of that put. And that's what we see here. Looking at the past 2 weeks, so this was right here was Friday and this is Monday. So notice how it was at 84.98. And even on Monday, it was still at 83.75. So I could have sold a put, but I slept in. And by the time I woke up, it was pretty low. And so what I thought to do was just wait for today, on Tuesday, to see if it could bounce back. Because AMD didn't have any news of it, crashing or anything, and new chip being delayed or new chip being broken or anything like that. There's no news. There's actually really good news. This analyst thinks it can hit a price of 135. So, nothing bad. It's just the stock market being the stock market. And here we are. It dropped. I was expecting it to go up today so I can sell a call at a higher price and make, money off premiums. But it dropped quite a bit again. And so I didn't want to sell a call because the calls are almost worth next to nothing. So what I wanted to do was just hold on to this 200 shares and wait for AMD to go back up. That's why you should only do this strategy with stocks that you believe that can come back up. And I for sure think AMD is going to bounce back from this. It's a great company and there's nothing bad going on right now with them. So I know it could bounce back. But I did sell one call because I have two of them. So I did sell one at strike price of 85. So I bought them at 85, now I'm selling them at 85, making no money, no profit, just off the premium. But as you can see, the premium is only $25. Right now the contract is worth 20, so if I sell it, I can make $5. But see how it's not a big deal. So if I go to view all options and I sell the call at 85, it's only $20. I can sell the other call at $20. I just don't think it's really worth it. Because if AMD jumps tomorrow $2, then I can sell it, at a bigger price. But there's also decay, as you can see right here, theta. This is decay. Every day that passes by, it loses 13 cents of what it has. So that's no good. But this is why the strategy sometimes doesn't work out. And so in my case, I lost money, but I only lose money if I sell the shares at $78. So what I'm gonna do is I'm gonna just hold on to it. I'm going to hold on to these shares and wait for AMD to bounce back up. And once it does bounce back up, then I'll sell calls at a higher price, make money off premiums, and make money off profit. I don't know what's going to happen. Today is Tuesday, so I'll keep you guys posted. So after you guys saw what happened, AMD, I sold a put at 85 and it dropped so much. I ended up selling a put at $86. Right now it's only worth $1, and I made $37 in there. Then I sold a put with my extra money on Wells Fargo at $24.50. So I made $13 off premium there. I'm going to let these contracts pretty much cancel out. They're not going to execute. As you can see, they're worth almost next to nothing. And so I added it in my portfolio. In my portfolio, I add today's return. This was yesterday's return. This is my portfolio as it is, my dividends. And here I have my trading. So as you can see, the last 3 trades, we have AMD 85 at 86 strike price. I made my premium of $25 and $37. And my Wells Fargo, I sold a put at $24.50 and I made a premium of $13. If you add all of these premiums up, this week's premium gains, we made $75 with a collateral of $19,500. So that's a return of 0.38. And that is because, of course, the worst thing that can happen happened this week. Our goal is to make a 1.5% return. So we should have made closer to $300 this week and just selling calls and selling puts. It is what it is. That's just how the market is. Sometimes you're going to make a lot of money. Sometimes you're going to not make that much. And sometimes you're going to lose some. Just to give you guys a little heads up on next week's trading options. I'm going to trade on Monday. And I'm going to expire on the 21st, so next Friday. And if we look at 85, so if I do it right now, I can make $88. So if I do 2 contracts, it's going to be closer to 180. So that's still not our 300 just yet, and that's because AMD is really low. But I'm gonna wait until Monday. Maybe on Monday AMD opens up a little bit higher. So I'm just gonna wait it out. I updated it in the portfolio, so you guys can take a look at it in the description below. And I'll see you guys on the next one. Thanks.